Hi, I'm Milton Rendell and welcome to Real News Friday. Another big week in real estate. Sales are up 10%, 1,020 transactions in West Australia according to the Real Estate Institute of West Australia. Now in terms of stock levels are up over the 8,000 mark again, so 8,135. Up a couple of percent. Now the reason for that being is there may be an introduction of landlords trying to sell or clear out their portfolios because a lot of the rentals in the last 18 months have been generated by people who weren't able to sell their property, so they're probably now looking at reviewing their portfolios and putting those properties back on the market. So there'll be a small adjustment for that, and that'll sort of balance things up a bit, which is all good. But over 1,000 transactions, pretty good effort. Rentals, only 2,731 available in West Australia. That's down 1% and down 50% on what it was 12 months ago. So we seem to be floating around this sort of 2,800 mark at the moment. We'll see where that leads us over the coming weeks. Now, big news. Footy's back. Yesterday, last night, great. Being a footy fan, I love it. AFL's back. We've got something to do on a Friday night. Hope your team goes well. Couple of questions I've had in recent weeks from investors as to where the market's going and, should I go in? So it really gets back to your own assets and what your cash flows are, etc. But is it a good time to enter the market? Yes, it is. I think we're moving to a market that is on the up, but also you've got to consider the interest rates. Now, fixed interest rates are as low as 1.89%. Yes, 1.89%, absolutely bloody ridiculous. Never seen it before in my life. You're talking to a bloke that had interest rates of 13 and 15% in the 90s. So to me, it's like zero. So your opportunities to borrow are certainly there, and they're talking about more relaxation from the banks in terms of how we borrow, and the criteria is changing. So if you are thinking about investing, sit down, go have a look, talk to your accountant, have a chat to your bank, see what you can do, and then go into the marketplace to see what you can afford to do. The returns are pretty large at the moment. Got to keep in mind, you're only borrowing at less than 2%, and most rental returns are at 3 to 4%. So many properties you're buying, you're in a positive cash flow. You don't get that very often. So give it some consideration, but also consider the places you want to be. Some places will have a better cash flow, and some others will have a better equity growth. Depends on what you're looking at, what stage you are in your portfolio, and where you are in terms of your investment future, of where you want to be. If you're a short-term investor, you may be just looking purely at cash flow, or you want to do an in and out where you do something up, and maintain your rent cash flow, and then unload. But just be careful. It always looks good in theory. Be mindful of your own skills and what you're capable of getting and doing. But once again, sit down with your accountant, see what the benefits are for you, and go from there. In the meantime, if you want to know anything about real estate, check on realestateplus.com.au.